Welcome back, everybody. It's your favorite female trader, SIMPLEFX, and we're back on this 4-part beginners mini series where I'm going to be breaking down a lot of beginner concepts for you guys in specific topics to help you beginner traders out there get a leg up with your trading. So, on this portion of the beginner mini series, I'm going to be discussing structure. Yes, structure. I say that word 1,000 times a day when I'm trading. I talk about it so much. So much is based off of it when trading, and if you're able to identify structure, it's going to make your life a whole lot easier when you're trading. Similar to identifying the trend, guys, identifying structure is with your eyes. Literally, it's looking at the charts and looking for simple higher highs, higher lows, lower highs. That's it. That is what identifies what structure is. Is the market creating higher highs to go bullish? Is it creating lower lows to go bearish? Or are we trending in a consolidation way, consolidation method, ranging, things like that? Okay. Now, like I always say, everything is based off structure. Literally everything. The trend is based off structure. Your entries, your stop losses, everything is based off structure when you're looking to trade, and you're looking at things like support and resistance. You're looking at price action. All those things kind of come together to kind of help you identify structure and be able to just look for a trade. Too many traders don't even know how to find a trade. They come to the charts and they see the candles and everything just kind of goes blank because they don't know where to start. They don't know what to look for. Okay. And the very last part of this series, which I'm going to drop right after this video, I'm going to basically simplify how to break down a chart and how to look for a trade. Period, point blank, simple. How to look for a trade, aka setup. Okay. But in this video, we're going to be going over structure. Okay. And I'm also going to be discussing breakup structure as well, because breakup structure is just as important as structure itself. And you're going to need to be able to see those things. Okay. For the sake of this example of this video, we're going to stick to the 4-hour time frame. I may drop down to the 1 hour, but for the most part, we're going to stick with the 4-hour just to keep things simple, clean, organized, and all of that. Okay. Now, before we get started on this, I want to go over a few things. I have been receiving messages with regard to people getting scammed out of Bitcoin, out of sending funds to some random person online who they think is me. Guys, I will never reach out to you on Facebook. I will never reach out to you on Instagram unless you reach out to me first, and it's my real verified page. I will never ask you how your trading is going. I will never ask you to invest in my Bitcoin mining company or whatever, or I just won't, guys. Okay? Please, guys, I implore you guys to do your homework when you're researching somebody. Okay? I am very transparent about everything that I offer online. I literally plaster my face all over YouTube. I am active on my Instagram. I am not on Twitter. Very hardly ever on TikTok when it comes to posting things on my page. I'm watching things on there at times, but I'm not very active on my TikTok page. I will not reach out to you on Facebook. I won't reach out to you on Twitter. I'm not on there. I won't reach out to you on Instagram unless you reach out to me first. I won't email you. I won't say, hey, this is my assistant, and they're reaching out to you on behalf of me. No. Okay. Everything that I do, I'm very open with. All of my contact information is in the description box of all my YouTube videos. Some of you guys don't or refuse to look at description boxes of videos when you're watching them. And you don't even know how much information is in those description boxes if you just take the time to actually look at the information. What broker do you use, Charlene? And that's on every video on my channel. What's your Instagram, Charlene? That's in the description box of all of my videos. What's your email? That's in the description box of all of my videos. Please, guys, if you guys want to be good traders and you want to be smart in what you're doing, you got to be able to pay attention to things, and you got to be able to pay attention to the small details that surround what it is you're doing. Because if you find yourself sending money to scammers, wasting time with things, buying things that are not real, falling for the okie doke, it's going to affect how you see trading. You're going to think, oh, this is all nothing but one big scam. everybody's lying, everybody's stealing, everybody's this, everybody's that, when in reality, you are the problem. You're the one that's not doing what you're supposed to be doing, using common sense to be able to not fall for these traps. So guys, I shouldn't even have to address this, but I'm being that I'm getting bombarded with so much, I'm going to. Please, please, please stop falling for things online. If you see something that even remotely looks weird, don't do it. Do your homework on it first. And then if you decide to do it, go right ahead. I'm not going to tell you to do it or not to do it, but make sure you're making the right decision. And if you do get scammed, do not message me. Don't message me after you've given the scammer money. Come to me crying, say, oh my God, I got scammed by this person pretending to be you. When you found the time and the effort to find the real me after you got scammed, but you didn't do that before you got scammed, which is what you should have done out the gate. Don't fall for it, guys. Nothing I could do about it. I've tried my best. There's, I want to say, I don't know, hundreds of fake pages of me on Facebook, on Instagram, TikTok, on every platform. I even saw myself on what's that site called? Indeed. Indeed. These hiring sites where they put all this, that, or whatever. It's ridiculous. It's ridiculous. They take my pictures that I post online, me and my family, friends, everything, and they plaster them and they make them look real, and then they put all a whole bunch of fake information in there, and you guys just keep falling for it. And every time I look at that information, I can't even believe how you guys are falling for it, because it just sounds ridiculous, but you still fall for it. I don't understand that. Nothing I can do about it. All I can do is put these disclaimers out. Do your homework, guys. Do your homework, do your homework, do your homework, do your homework on whatever it is you want to invest in. If you're spending money on it, do your homework first, because a lot of times you can't get your money back. All right? Don't fall for it. All right? So that I just want to get that out the way, because it's been quite frustrating lately to hear that that's happening to you guys. Watch your back, guys. Watch your back out there. There's a lot of people that don't want to do the right thing, taking advantage of people out here, and it sucks. Nothing I can do about it. Like I said, just follow what's in the description box of all of my videos. What broker do I use? HANKOTRADE. It's in the description box of the video. No longer using MetaTrader. We're on ActTrader. Okay, so if you see somebody say, yeah, we're using this, come on over here, this is what it is, do your homework first on it. Do your homework first on it. I have plenty of live trade videos where I show myself using ActTrader with HANKOTRADE. So if you see something else out there, just know it's not real. Or at least it's not from me. It's not the real me. If the name is spelled funny, if the email is funny, if the broker isn't this broker, then you know it ain't me, guys. It's not. And if you fall for it and you get scammed, you got to learn the hard way. Okay? What account type do I have? ECN. I get that all the time. What account type? ECN. And the leverage is 1 to 500. Okay? So let's get back to identifying structure here on AUD USD. Now I'm using AUD USD because it's a very good beginner pair. Gold, US 30, not very good beginner pairs at all, in my opinion. Some people start with them and do great. That wasn't the case for me at all. I failed miserably when I was a beginner trader trying to trade those pairs. So I started out with more easier ones. Some easier beginner pairs are gonna be AUD USD, Euro Dollar, USD JPY, GBP USD is a nice beginner pair, and those are just about the only ones that I know of. Those are the ones that I was trading when I first started out. There could be more beginner pairs out there, but for the most part, those are the only ones that I know of. The only reason why I call them good beginner pairs is because they're very slow moving pairs. The spreads on them are very low. They're not as volatile and as fast and quick paced and quick moving as some of the more difficult pairs like gold, US 30, GJ, and pairs like that. All right, so that's why I kind of call them beginner pairs, because they're not so crazy. Also, they follow structure very well. From what I see, they're good pairs to practice identifying support and resistance, structure, price action, all that stuff with those pairs, because they're so smooth moving. It's not as anxiety inducing to go, when the pairs go crazy and they're doing a bunch of stuff you've never seen before. It's kind of hard to learn from that, because it's all over the place. The pair is all over the place, so you're not really sure what it's going to do. So you don't know what to look for. Now you're intimidated. Now you're scared. You have anxiety. Boom. And you find yourself at rock bottom again, starting all over again. All right. My contact is killing me right now. Okay, so let's get into structure. So when you're identifying structure, guys, all you're doing is trying to identify where the market is going and where's the next best place to take a potential trade. All right, so here I see the market was making a high, then we had a low, and we have a high, equal highs, and then a higher high right there. Equal highs, guys, is when the market retests a certain area, like this area right here. You see that we came up here, made a high, we retested that high again, and we came back down. Equal highs and equal lows. So you just have the market retesting the same exact area. That makes them equal spots, okay? Now, when you're looking for an area of, or you're identifying structure, you're looking for something that's similar to this, okay? Just looking for the market to move in waves like that, okay? In order for this bullish structure here to be maintained, these lows have to be respected. The highs are fine. You want it to create higher highs, but you absolutely positively do not want your lows to get broken. Because if your low should so happen, let's say it does this and then it does that. If your last major low gets broken, doesn't necessarily mean you have a break of structure just yet. You would need that low that was once a support to now act as an area of resistance and then create a lower low. So this low that was formed here creates a high, lower high, and then it comes down to create a lower low. So when that happens, now you have what's called a break of structure right here, because you had structure moving nicely here. This was your last major low. Price made a higher high. It broke that low. This was the low you wanted to see get respected. It broke that low. Not confirmed yet. The only time it's confirmed is when you get that retest, and then price continues to break that low and creates a lower low. So it's kind of a 2, 3, 4 step process here before you finally get that last confirmation that price is flipping the trend, and now you can start potentially looking for the bearish trend as opposed to the bullish trend. Okay, so with this example that I just gave here, you want to see that here. You see the market moving in waves, right? Up, down, you have equal highs. Now all this can happen here. This is fine right here, this consolidation area, as long as this low doesn't get broken. I am still very much bullish. There's no break of structure here because my major low has not been broken yet. Okay, and this is on a 4-hour time frame. Now sometimes you can have this same exact structure on the lower time frames and you will get a break and a retest, and then the market will continue going wherever it wants to go. But for the most part, when you're identifying this on the higher time frames, you're getting a bit more stronger confirmation. Okay, let's continue. Let's continue looking for structure here. Structure is literally just identifying highs and lows. High, low, higher high, higher low, higher high, higher low. Notice how this low didn't break that low. Notice how that low didn't break that low. Notice how this low did not break that low, but we continue to break highs, creating newfound areas of structure. Price comes back down here. Now this is a great example here, right? Let's remove everything here. This is a great example here, right? You have price up, down, high, low, high, low, high, low, high, and then we have a low where this candle here, this drop here broke these last areas as lows, right? If I grab my marker here, right? 1, 2, 3 lows. Let's call it 2 lows here. Okay. This I can say was my last major low, and the market broke that low. But guess what? We haven't had a retest yet. The retest didn't come until this push here. Okay. Now, not necessarily you want to see it retest that area. You just want it to come into a certain point, preferably after you have a big move, like a big drop down or a big push up. You want to see the market retest at least 50% of that move. 50 to 61%. 61 is that golden area, but 50 is fine as well. Okay, you have big move here. So let's call this right here, let's call this 100. Let's call this 0. So if this is 100 and this is 0, 50, which is half of this move, would be probably right around that area there, right in between that area there. If you want to get technical, we can bust out a fib and put the fib from high to low, and there's your 50, right around where I have it right there, spot on. 50%. Now, this area right here, I'm going to mark it off here, is your area of interest. Area of interest. Why? Because what happens here is going to dictate what your trade is going to be. If price breaks above this area, more than likely it's probably going to continue bullish. If it breaks below this area, most likely we're going to come back bearish, potentially retesting the low or retesting the high if we go bullish. So when you have structure being formed, high, low, high, low, high, low, high, low, high, and then you have a low that breaks your previous low, you don't yet have a break of structure until you get that retest. Now, if the market had done this, where it comes down, pushes up like this, and then did that, now you have a confirmed break of structure. But because the market came here, sat down, created a support at that area, aka gave you reaction, and then it pushed up, now you have more confirmation that, hey, we've broken out. We have a nice engulfing candle here that broke these candles. Now we're gone. Another great confirmation is what, guys? We talked about this in the last beginner mini series video that I put out. You have price that's holding above a certain area here, above and below a certain area. Because if, let's say this hadn't formed yet, this structure here has not formed, and you're just looking at here, you have the market holding right here. And it's the 4-hour time frame. So for 1, 2, 3, 4, 4 times 4, 16. So for 16 hours, the market sat here until we got this big breakout here. Now we can't just take a buy here and just let it run crazy. Even though it went up, that's great. But you can't just take a buy here and let it go crazy, because what do you have here? You have a resistance right here where price already told us once before that price has held as a resistance. But if I take my marker here and I mark a line right there, I have price that held as resistance, and now it's holding as support. Holding as support, and then eventually price took off, and what do you know? An area where price once held as an area of support, broke, held resistance because it held below, now broke above, and now we're gone. And now I see that price is holding this area here of support that was once resistance. Now we can look for price to continue bullish, and then look for our newfound area of structure going there. I hope I haven't lost you guys. Okay, if you're confused, please rewind the video and go back. All right, so identifying structure is just that, guys. You're looking for a price to make a high, low, high, low, high, low, and you're looking for it to maintain your previous lows if you're looking at buys, if you're looking at the market going bullish. Now, if the market's going bearish, like we see it going here, now we're looking for the opposite. You're simply looking for the market to make lower lows. Forget about the highs getting broken. I need to see my lows getting broken. If my highs get broken, I'm looking for the same thing. I'm looking for the market to come down, or retest that area, and then come back and break the previous high that it made, to break the trend in the first place, and then to take off. So literally, guys, when you're looking at the markets and you're breaking things down, whether it's buy or sell, you're literally flip-flopping. You're literally just flip-flopping, but it depends on the trend. Depends on the trend. If the trend is bearish, you need to look at it from a bearish perspective. If it's bullish, you need to look at it from a bullish perspective. It's simple. You're doing the same exact thing, just on the opposite side of the market. Okay, one more time. We'll look here. We have the market was pumping bullish here, right? We have a break. We have a break. This was our low. We have a break that broke, but is it a confirmed break of structure yet? No, it's not. I need that retest. I need a 50 to 61% retracement of this move. And then, boom. And the good thing, guys, a little cheat sheet for you guys. When you get a retracement, especially on the 4-hour, and you get that pullback, most likely you're going to get a couple tests of that area before the market pushes. If you notice, guys, when the market is trending and it's creating structure, after every big move, you have a little consolidation before the next big leg, right? You have this consolidation here, consolidation, big drop, retest, consolidation, drop, retest, consolidation, drop, tiny, tiny consolidation, push, drop, and now guess what? We're flipping the trend. We're going back up bullish. Every time before the next leg is created, you always have that little bit of consolidation, but this is on the 4 hour. So sometimes people will enter trades, right? And this is what gets frustrating. I used to get caught in this all the time. People would enter trades and say, oh, okay, I got a resistance forming here. Perfect. I'm going to go ahead and take my trade. Boom, take my shorts right around this area here. This thing should play out nicely. Boom, boom, boom. And they'll get in a trade inside this area with a great entry. And the market will take so long to actually move it. It'll maybe even spike up on them and make them a little scared. And they'll get out, the stop loss will get hit, whatever the case might be. And they'll wake up the next day and watch the trade actually had played out in their direction. And then they get frustrated, like, man, what happened? What did I do wrong? And sometimes where you get in, it's just a matter of patience and waiting, using the right risk management, and letting the setup play out for itself. And here on the 4 hour time frame, I've got 1, 2, 3, 4, 5 candles before the market pushed. Before we got this drop, we had 5 4 hour candles that formed here. 5 times 4, 20. 20 hours, almost an entire day. The market sat here for a whole day before it actually moved. Extremely frustrating. But if you backtest and you study and you know to identify these things and you see it happening all the time, big move, consolidation, drop, and we get that little consolidation before we get that retest. And then if I see a big move, I'm looking for that 50 to 61%. Then I'm looking for that next drop. But that drop probably is going to come after a little bit of consolidation. So I need to give myself a little breathing time, a little wiggle room. You get me? So that's all it is, guys. It's just being patient. Being patient. If you're looking for structure on the bullish trend, you look for structure on the bullish side of the market, you just need your lows to be respected. On the bearish side, you need your highs to be respected. Easy peasy lemon squeezy, guys. It's not hard. It's not hard. All it is study time. Study time, chart time. That's all it takes. All right. That's it for this portion of the mini series. There's one more part coming, and that's it. That's all I got. Please rewind the video, re-watch it, take notes, try to understand what it is I'm explaining. Questions, comments, concerns, drop it in the description box, and don't forget to like and subscribe. As always, your favorite female trader, SIMPLEFX. I'll see you guys on the next one. Peace and love. I'm out.